Welcome back to the Quarterly Call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. Today, we're going to take a closer look at DoorDash's latest earnings call. Really try and get under the hood of the numbers and announcements.
Yeah, understand the strategic direction, right? Where they're actually heading.
Exactly. We've got details on some potentially, pretty significant acquisitions, how they're doing in new markets, new categories.
And, how they're thinking about growth versus profit, future tech, all that good stuff.
It seems like there was a lot packed into this call.
Definitely wasn't just a standard financial rundown. I mean, the talks around M&A, international stuff, grocery performance, it paints a pretty interesting picture of local commerce's future.
Okay, let's jump right in then. The big news, or potential news, is this Deliveroo offer, 180 pence per share. What's the core thinking there for DoorDash?
Well, fundamentally, it looks like a big strategic push to really beef up their international game, especially in Europe.
They already have Wolt there, of course.
Right, exactly. And bringing Deliveroo into the fold would give them, well, just massive scale across the continent. The idea is that this bigger scale unlocks efficiencies, drives profit, kind of like they saw with Wolt.
Ah, okay. So the Wolt integration is kind of the playbook here. They're hoping for similar, maybe even better profit potential.
That seems to be the expectation. Yeah, they've sort of proven they can handle these big international integrations.
And it's not just restaurants, is it?
No, definitely not. A key piece seems to be rolling out DoorDash's, broader local commerce services into Europe. Logistics, other merchant tools, getting those to a much wider audience.
Now, DoorDash hasn't really been known for throwing around these huge acquisition offers historically. Does this, plus the 7 rooms deal we'll get to, signal a shift in strategy, a change in thinking?
They were pretty clear that their basic philosophy on big deals hasn't really changed. The bar is still incredibly high.
So what clears the bar then?
It's mainly about, does it significantly grow their addressable market? Or does it really complement what they already do? And crucially, does the target have a solid, proven operational track record?
Got it. So for Deliveroo, it's clearly that massive market expansion in Europe. And if this deal actually closes, their global footprint becomes pretty substantial.
Oh, yeah. They mentioned something like if it finalizes, they'd be in about 30 countries in Europe and maybe 45 globally.
Well, that's a lot.
Okay. Let's switch gears to the other deal causing some buzz.
Yeah.
7 rooms. How does that fit into the bigger picture, their commerce platform idea?
Right, 7 rooms. It seems like a really interesting piece for their commerce platform evolution. They started with logistics as a service, DoorDash Drive, then added online ordering with Storefront, and now 7 rooms looks like it could be, well, maybe marketing as a service.
Marketing as a service. Tell me more. What does that actually mean for, say, a restaurant owner? Well, the interesting angle here is helping restaurants really understand their own customers better, build direct relationships. 7 rooms does things like reservation management, guest profiles, marketing tools.
I see.
So integrating that into DoorDash could give restaurants way more data, new ways to connect directly, not just through the delivery transaction.
So it's about empowering the restaurant, giving them more control over that customer relationship.
Exactly. More intelligence, more tools to build those direct connections. That's something you hear merchants asking for constantly.
Okay, let's pivot to how some of their newer bets are performing, especially grocery. The call sounded quite positive there.
Yeah, the new vertical segment, grocery being a big part of it, seems to be doing really well. Strong growth. They pointed out more monthly active users are ordering from both grocery and restaurants now.
Oh, interesting. So good cross-pollination happening.
Seems like it. And those grocery customers, they seem to be spending more per order over time.
And why is that? What's driving the higher grocery spend?
Looks like a few things. One is just habituation. People get used to it, maybe start using it for bigger shops, not just top-ups.
Right, moving beyond convenience to core shopping.
Potentially, yeah. And also, selection's way up. They said most of the top 20 U.S. grocers are on the platform now.
That definitely helps.
Yeah.
Better selection makes it stickier.
For sure. And they also mentioned the quality of the grocery product itself is improving. That's apparently helping them gain order volume share. They even floated the idea of becoming volume share leaders in grocery within the next year or so.
Wow, okay, volume share leaders in grocery. That's ambitious.
It is. And importantly, they also noted that the margin performance in new verticals is looking promising. It's becoming more profitable.
So with all this growth, these acquisitions, how does it square with their overall financial approach, the focus on EBITDA?
They hammered this point home again. The goal is always growing the business, while increasing overall profit dollars, the actual EBITDA number. And they stress that these acquisitions, even big ones like Deliveroo potentially, aren't expected to fundamentally change that earnings model.
So it's not growth at any cost then?
Not according to them. The strategy is invest where things are working, improve the underlying economics of each order, the unit economics drive retention, get people ordering more often, and that's how you get scale and profitability. Any big investment has to show a path to a decent internal rate of return.
Makes sense. Let's talk affordability. We heard about initiatives there and how that might play into their take rate, their revenue margin.
Yeah, and it's important to remember their main goal isn't just maximizing the percentage margin on every order. It's growing the total dollars of profit.
Right.
So the take rate can move around based on seasonality, investments they make in affordability or selection, and just the mix shifting as new, maybe lower margin categories like grocery grow.
So a slightly lower take rate sometimes might actually be part of the plan to drive more overall profit.
Exactly. It could be a strategic investment. They did say, though, that they expect Q2's take rate to be higher than Q1's and the second half higher than the first half.
What's driving that expected increase?
Mostly seasonality, continued improvements in those unit economics we mentioned, and growth in their ads business, which tends to be higher margin.
And Dash Pass, that seems crucial for the affordability piece.
Absolutely. They talked about strong subscriber growth there and DashPass members ordering more frequently. It's a key lever for providing ongoing value. And they apply these affordability efforts everywhere, all geographies, all categories, trying to constantly build value.
Okay, back to Europe for a second. Competition there is famously fierce. If they add Deliveroo, how do they tackle that?
They acknowledge it's tough, yeah. But they circled back to the focus on long-term profit dollars, not just chasing unit margins, even in Europe.
So the logic is scale.
Pretty much. Add scale with Deliveroo in the same region. Apply lessons learned elsewhere. The idea is that improves the underlying profit engine of Deliveroo's operations.
Bringing their operational know-how to a bigger footprint.
That's the plan.
Yeah.
And again, they only invest when they see something working, product market fit, good retention, people using it often, and those unit economics heading in the right direction. Their view seems to be that scale itself is key to making money, maybe even more than just relative market share in some cases.
Let's go back to the grocery experience itself. They're growing fast, but they admit it's not perfect yet compared to walking into a store. What are they working on?
Yeah, they were pretty upfront about that. Key areas for investment are order accuracy, getting exactly what you asked for.
Crucial.
Totally. Then affordability, delivery quality and service, and customer support. The basics of good retail.
The fundamentals.
Right. But they also talked about where online can be better, like DoorDash.
Ah, yeah, ordering from multiple places at once.
Exactly. You can't easily do that hopping between physical stores.
Oh.
So that's a unique online advantage.
And having that huge existing user base from restaurants must give them a leg up in introducing grocery.
Definitely. It's a massive built-in audience they can market grocery to, cross-promote. It's a big strategic asset.
We also heard some pretty ambitious talk about Dash Pass and where that's headed. Sounds like more than just free delivery.
Yeah, the vision there is pretty grand. They described it as potentially becoming a membership program for the, quote, physical world.
The physical world.
Right. Connecting local businesses and consumers in all sorts of ways, well beyond just food. The focus is just making it more useful, finding more ways to link members with local merchants, better services.
Wow, okay, that's thinking big. What might that look like practically?
You can imagine maybe benefits not just on food, but retail discounts, local service offers, maybe exclusive access to things. The idea is to be like a key to your local neighborhood's commerce.
A powerful loyalty play if they pull it off. What about the really future-looking stuff? Autonomous delivery.
Still excited about it, still working on it. They talked about the main hurdle being that first and last 10 feet problem.
Loading and unloading, basically.
Exactly. And also getting the right type of vehicle for what's being delivered. Like you don't need a car for a single pizza, right?
Yeah.
They mentioned progress and partnerships there. So it's on the roadmap, but maybe not imminent.
Still developing. Okay. Another area was portable benefits for Dashers. What's the latest there?
They sounded quite positive on the idea, pointed to efforts they already have in Pennsylvania and talks with other states.
Trying to find a middle ground.
Seems like it. Their line is that Dashers want flexibility and benefits, and they think there could even be some movement at the federal level eventually. Trying to be proactive, it seems.
Interesting. Okay, a couple of quick financial points. Average order value, AOV, was up. Why?
Mostly because grocery is becoming a bigger slice of the pie, and grocery orders typically have bigger basket sizes than restaurant orders.
Ah, mix shift.
Exactly. Restaurant AOV itself was pretty stable. But within grocery, basket sizes are getting bigger too, as people use it for, bigger stock-up shops, not just quick fill-ins.
Got it. And lastly, any impact from tariffs showing up yet?
They said basically no, not really seeing effects right now, partly because a lot have been paused. They also made the point that food and convenience spending tends to hold up relatively well even when the economy gets choppy.
Right. Resilient categories.
Yeah, so their focus is just controlling what they can control.
Yeah.
More selection, better affordability, improving quality and service.
Okay, so wrapping this all up, it feels like DoorDash is really pushing on multiple fronts. Big potential acquisitions for international scale and merchant services,
Uh,
strong growth in newer areas like grocery,
yeah.
fueled by getting more partners and users hooked.
Right, and all underpinned by this financial strategy focused on long-term profit dollars, not just margins.
And they're keeping an eye on future tech like AVs and the evolving landscape for worker benefits.
Exactly. It's a complex strategy, really trying to leverage that convergence of food, grocery, and other local commerce. Could definitely reshape things in the next few years.
So maybe the final thought for you listening is, considering this multifaceted strategy, how might this increasing blend of food delivery, grocery, and merchant tools change how we all interact with local businesses day to day? Thank you so much for tuning in to the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.